Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest. Chuck Ferry of DUOT Technologies and Doug Recker of DUOT Edge AI. DUOT has gone through one heck of a transformation in just a few years. They started out with their railroad inspection portals, which has given them all kinds of experience in edge data AI. And that is how they've expanded into data centers for rural areas, smaller in nature, but providing tier one status. They recently have also expanded into energy. But I'm going to let Doug and Chuck tell you all about it in just a minute. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a follow-up. This is an exciting one. They just reported earnings, which may have been the numbers may have been disappointing, but you know I don't look at what has happened. I look at where we're going, and I think you'd be hard pressed to find a company out there that has as many positive developments happening all at once, right? So we've got Chuck Ferry and we've got Doug Recker from DUOT Technologies Inc. and also DUOT Edge AI. And man, you guys, how are you guys doing?
Yeah, we're doing good. We're very, very busy, and you know, we can talk about it some more. Obviously, we've made some real proper steps now to diversify our business and really change our future. So, yeah.
Yeah, we were just talking before we hopped on that this is what a dramatic change just from 6 months ago. I mean, it's a whole different animal here, right?
Yeah. So I think what we've been able to do, you know, is basically be able to diversify the business. We've been talking about it for a while, actually for a couple of years. But this last year, we really got started in earnest. So it started last summer when we stood up DUOT Edge AI, you know, Doug's business, and Doug can talk some more about it here in a little bit. And then we now have a proper power business in that we were able to acquire, with the help of a Fortress Investment Group, about 850 megawatts of mobile gas turbines from a company I used to run called APR Energy. And so that, along with the edge data center strides that we've made here over the last few months, has dramatically changed the course of our company going forward.
So let me just highlight this real quick, Doug, with your edge AI. So, I mean, just give everybody a background. You're like considered kind of a rock star in the whole data center world, right? You've been there for a while.
Just don't have any vocals, but yeah, I'm I'm one of those guys. Yeah, it's been interesting, and it's a heck of a ride so far. So the edge business, obviously with those small micro data centers, and then you have the big motherships, these big AI data centers that are coming up, and the need for power at all these facilities is just it's crazy, and it's perfect timing for us. Perfect timing.
So you understand, I mean, how long have you been involved in data centers? You've been involved with the big data centers, right?
Sure. Yeah, I've got going on 30 years on you know, I started building the brick and mortars. I owned and operated those. That was Colo 5 back in the day in 2008. And we exited that in 2014 to Cologix, a bigger outfit. Bought both of our big brick and mortars in Florida. And then started the Edge Presence business, which we sold about almost, I guess, 2 years ago now. And that basically was what I came to Chuck to do, but focused on education. That was more of the mobile operator. Now we're focusing on education and healthcare with the modular, tier 3 and tier 4 markets, which is a hot spot for us right now, especially Texas. And we can go into that in a little bit, but the goal still is the same: 15 of these micro data centers out, this year. And we've got one on the ground, and we lit it 2 weeks ago. It's billing now. Chuck, I was lucky enough to have Chuck and the team out there for the grand opening in Amarillo. It went off great. That was the first one at Region 16. Now we've got three more going on the ground in the next 60 days. And then we're going into production for more pods. So we're on track for our 15, which is committed. And then the following year is going to just blow up.
All right. So the pods that you're talking about, they have about how many servers in them?
So basically, it's just like a normal co-location facility. It has 15 usable cabinets inside of it, and it can range up to 200 kW. The new ones we're building now are going up to 300 kW. So basically, what happens is it's a real estate play and a data center play. So they come in, they rent the actual cabinet, the 4x2 cabinet. They can rent one, or they can rent all 15. And they also pay for power that they consume inside there. And then there's connectivity. There's cross connects over to the carriers. And what we do when we deploy one of these 55 by 12.5-foot long pods, these modular data centers, is we bring in multiple carriers. So there's 2 carriers at a minimum in each pod, and they come in diverse paths. So those carriers take space inside the pod too. And that way the customer can cross connect to multiple carriers. It adds redundancy for the customer. And then also the way we build the pods, we build them just like they are a tier 3 facility, N+1, big brick and mortar. So we have 2 generators by these pods. We have 2 ATSs, 2 PDUs, two diverse paths for fiber. So it's all redundant. So they typically, in these markets that we go into, especially with the school systems like these region centers, they don't have the capabilities. They don't have the redundancies in their facilities or built in the network. So it's worked out awesome for Amarillo. And we're taking that proof of concept now and we're launching it through the state of Texas. And then obviously we'll go to other states, but our focus right now is Texas because there's only so much we can chew right now, but it's been going perfect.
So you got power, you got fiber, and then what about keeping it cool? What about
So everything, like I said, on the pod is redundant. So we have big air sys units. We have 50 ton going into these pods of cooling when most of the times you need 30. So we have redundancy built into the actual unit, so they'll cycle. And we have what's called a DCIM tool that monitors everything remotely in our NOC here in Jacksonville. And then we have a NOC out in Texas as well that mirror each other. And so what they do is those NOCs are 24 hours a day. So if there's an issue with, say, the fuel level in the generators is low, we'll get an alarm, ship somebody out there to fill the tanks. If the humidity level is off, if the temperature is high or too low, all that stuff, access control, people coming and going. It's an audited facility, just like a normal data center. So we know exactly what goes on with that pod 24/7, from people to environmentals.
That's awesome. And a lot of that, DUOT had the ability to build these things because of the fact that they've got the AI railroad inspection portals that they've been building in the middle of nowhere for.
Right. And that's what the great fit was, obviously. That's why I came to Chuck, because I knew Chuck had the staff. And that's the biggest issue, that you have is, hey, you've got to build these things, you got to deploy them, right? That whole process. So Chuck's team has that piece down. I had the idea piece, which is the easy piece. So to make it happen, Chuck has the right people in place, and we brought on a few more. So we have a solid team, and it's a process that we built internally now that we can just throw these out. So
I love it. So Chuck, let's talk about the railway inspection portals, right? I mean, you've got that business. That business, I think you did as much as you could possibly do to get that business right? You brought in the right people. The problem is the industry itself is pretty slow to adopt. Would you agree with that?
Yeah, everybody in the rail industry that has seen the railcar inspection portal and sees the data, the safety data that it produces, all of them agree that it's definitely a technology that will be used in greater numbers, except the uptake is slow. And so they also, the same experts, because they're from the rail industry, acknowledge that the rail industry, by and large, is slow to to take new technology and spread it, throughout the industry. So it's going to get used. The Class 1 railroads, the Federal Rail Administration, the labor unions, all of them agree that it's the technology of the future, but it's still going to take some years for it to really be out there in large numbers. And that's part of the reason what drove us to want to diversify and take a little bit of the risk out of this business through that diversification.
Well, this is looking like a pretty brilliant risk, but there must be one Class 1 that thinks that your technology is going to be used because they're copying it, right?
Yeah, I guess the best form of flattery, right, is when somebody copies your homework. Look, Norfolk Southern is as in a partnership with Georgia Technical Institute, and you can read about it because they've marketed it. Basically, they've copied our patents. The equipment that they're deploying literally looks exactly like ours. And the way they talk about it is exactly how we talk about ours. So, we have over now probably 12 patents on all the various different aspects of the railcar inspection portal. It includes patents on the hardware, the software, the IT, as well as the artificial intelligence and how that thing is deployed and how it's used are all patented. So we've given them notice. And we'll be pursuing this legally here to make sure we protect that IP.
Which you absolutely should, right? I mean, it'd be much easier for them just to go ahead and do a licensing agreement with you, I would think, right?
It would, and look, I mean, if you think about it this way, look, we've probably invested, with our shareholders have invested probably over $90 million now into this solution over the last 10 years, and to have somebody come in, year number, 9 and basically copy your work and start using it for themselves. It's not the American way. And yeah, that could all be solved with a very simple licensing agreement of some sort where we'd be happy for NS to use it. We just want to make sure that we're being paid for all the investment that we put into these patents.
Which is the way it should be. So we kind of highlighted Doug's expertise in the data center field. Let's talk about your expertise in the power generation field.
Yeah. So from 2016 to 2020, I was the chief operating officer and president, and then later CEO for APR Energy. And APR Energy had been in the power sector and is a well-known name in the power industry. And really, it's really known for its ability to deploy fast power in very short periods of time. For example, in the fall of 2017, my staff and I built 5 power plants in 5 separate locations, 2 in South Australia, 2 in Puerto Rico following the hurricanes there. And then we airlifted a 5th plant into southern Mexico following some earthquakes. And probably, in the matter of about 90 days, installed all 5 power plants. They exceeded collectively 500 megawatts across those 5 power plants. And the team that performed all that over the last 4 years has kind of already joined us over here at DUOT Technologies. So, earlier this year, late last year, we became aware that my old company, APR Energy, who's owned by Atlas Corporation, they had not done real well since I had left 4 or 5 years ago, unfortunately, and we're basically selling their assets off. And so I started getting phone calls saying, "Hey, Chuck, we'd like you to come help us buy these assets." And I kind of told my teams, like, you know what, let's just do this ourselves. We know how to run the assets, but we just need to find somebody who will actually, get behind us and fund that for us. And we were fortunate to be introduced to Fortress Investment Group, who invested a significant sum to stand up a new APR Energy it's actually separate from DUOT, and I'll explain it here in a minute. To actually buy the assets and then capitalize that business to make sure that it has all the funds it needs to operate that business for the first year or so. So what we did is we put an asset management agreement between new APR Energy that's owned by Fortress and DUOT Technologies, where effectively new APR Energy with Fortress, they own the assets. The staff of DUOT, though, basically runs those assets. And through this asset management agreement, which will last for 2 years and it has options to be extended. For DUOT, what that does for us on the DUOT side is it's going to allow us to break even this year, which is a big change for us. That's a huge change for us. Everybody that watches knows that. What it also does is it gives us more capital to invest against Doug's business, that edge data center business. And it really allows us to now properly grow out really all three of those lines, de-risk that rail business, but make us profitable going forward. And I think that should be exciting for folks that have been investing in us for the last several years.
So if I look at the market, even with the meltdown of the tariffs, right? I look at there's three hot spots. One is artificial intelligence, which you guys are in. The other is data centers, which you guys are in. And then the other is power, which you guys are in. Right? Those are the three hot spots in the marketplace. And what's so exciting to me about this is the fact that the team that you have for the power generation, I mean, this is like a coming home party, right? I mean, this is not an integration where it's going to take a while to get your people acclimated to the way you run a business.
No, it literally, what we've done is, we've effectively reunited the former management team of APR Energy back with the assets of APR Energy. And again, we have all the skill sets that you need to run a power company. And we've started day one because we've already deployed or put on contract 13 of our 30 mobile gas turbines. And we're getting ready to contract for another 6 to 10 now as we speak. So, and the reason why we've been able to do that so quickly is because the staff already knows how to run those assets. And so we really started day one to be able to, really just start running. But it has been a very enjoyable homecoming because we did pull in some of the additional folks from old APR. They're folks that all used to work for me and work for our teammates here. And so it has been definitely kind of a reunion of sorts with not only the assets, but more importantly, the people that have brought all that in. And again, the ability to deploy fast power is a skill set that is really aligned with deploying edge data centers, which are actually simpler to build and deploy than a power plant. But all those skill sets are very synergistic across all three of those lanes.
So just so I'm clear, I mean, yes, you have the I guess what is it? The mobile power, right? Or the temporary, I guess you could say it's temporary power. But you have the ability and skill set to build the full-blown plant, right? I mean,
yeah, we have so these are what they call mobile gas turbines. They're effectively there's two kinds. It's a Pratt & Whitney FT8 mobile pack is what they call it. And then they have the trailer-mounted TM2500s, which is a General Electric product. And they've been around for years. And we used them at APR for years. And so it also comes with what we call balance of plant. That includes things like transformers, fuel forwarding equipment, filtration equipment, and things like that. But basically, it's mobile because it's got wheels on it, but sometimes these assets will go in and they'll stay where they're at for 5 to 10 years. So they're mobile because you can move them around real fast and build power plants like really fast, like in a matter of weeks. We're not talking about months. But we also, on our staff, we also have experience building permanent power plants. So building some of the larger, what we call LM6000 General Electric plants, as well as Siemens plants. And so we have guys and gals that have done those type of power plants. What we're seeing right now in the space is where people want let's say a 3 to 5 year bridging power solution, which would be our mobile turbines. But then when they would like us to replace that with a permanent power solution, which often will involve those larger assets. And sometimes you'll take them from what they call open cycle to combined cycle to make them more fuel efficient. So again, that's another aspect of the power industry, that it's not just the mobile gas turbines. Those are just kind of like the entry point to then now we're in a deal where now we're building a more permanent behind the meter solution, which then has also led to requests for us to actually build out data center parks, which we never really thought about until all of a sudden we walked into it. So, yeah.
So the very different from the railway business, there appear to be a lot of opportunistic opportunities for you guys, right? I mean, there's some really, this could lead into something much bigger than even you thought, right?
Yeah, I think what we're going to see happening is, duos in our partnership here with New APR Energy and with Fortress Investment Group is most likely to become, I'll say, a data center infrastructure company, or maybe we can just call it an infrastructure company. That infrastructure being data center parks, potentially manufacturing parks, that's got a behind the meter power solution. That combined with edge data centers, which is part of an overall network. I think that's the direction that we're likely headed, because that's kind of what the market is clamoring for right now. Different from the rail business is that the demand and the willingness to transact to get into an edge data center or a normal larger edge data center with behind the meter power it's off the chart. And it's expected to grow significantly over the next 3 to 5 years for sure. And it's an unmet demand. So, you could argue and say, hey, there's competitors, sure. But there's so much demand right now, who cares? There's just crazy demand for this stuff.
And there's competitors, but very few competitors that have the data center expertise and the power expertise in the same place, right?
Yeah, I think that's true. This moment, that is in fact true. And then I'll say the operational and technical expertise to actually be able to install it, and not just to be able to install it, but having already installed it before with past experience. So again, Doug and now our team has real practical experience putting in the edge data centers. Doug and a couple of other guys that we have here on the team have practical experience building out data centers. And we've got a ton of experience on the team right now that knows how to build power plants and do it quickly. And so I think should be one of the reasons why people would come to us first, to kind of draw on that expertise.
So let's talk real quickly about the tariffs. Do you see any kind of immediate impact there?
For our business right this moment, no, for a couple reasons. One, on our railcar inspection portals, just about everything inside that portal is built in the United States, built or manufactured in the United States. We may have some raw materials, such as steel and aluminum, that are coming from non-US sources, but we haven't seen any pressure on that yet. We'll see how that goes. But by and large, that is completely built and manufactured in the United States. It's also patented in the United States.
Does that include all the technical stuff, all the computer stuff?
Yeah, by and large, again, some of the components might originate from overseas locations, but it's very, very minimal. on the ones that do. So on the edge data center side, again, those are manufactured in the United States. There are probably some raw materials that are potentially coming from overseas, so we may see some pressure there. On the power business, the equipment that we currently have, the 850 megawatts of balance of plant, we already own it. It's already here in the United States, so there should not be any impact at all for the tariffs on that.
Okay. So, and just to be clear on it, so APR is a separate entity, but DUOT owns 5% of APR. Is that correct?
That's right. Yeah. So new APR Energy or APR Energy, owned completely by Fortress. DUOT does have a 5% ownership equity stake into new APR Energy. Obviously, we contribute our staff, and then some of us, like myself. So I'm also the chairman. Simultaneously, I'm also the chairman and CEO for new APR Energy. I run a separate private board of directors over there. And then Doug also does double duties where he's the chief commercial officer for APR Energy. And then my chief operating officer, Chris King, is also kind of dual hatted across the two. I have a separate president and CFO for APR Energy. And then obviously on the DUOT side, I obviously have a separate CFO and CTO on that side to kind of keep things sorted. But really, in effect, there's one staff, and I run both businesses here out of Jacksonville.
Okay. What an incredible, awesome setup, right?
What's been really probably the neatest thing is really the commercial activity. The commercial activity and the size and the opportunity of our pipeline for both Doug's business, the edge data center business, has really taken off, which is causing us to now make serious plans about scaling that business up. And then the pipeline of opportunities in the U.S. data center space for the power that we have is literally off the chart. We're in a process right now where we're having to prioritize and be very selective about where we deploy these power assets, because we've got more demand than we do the megawatts right this moment.
So what happens if once you sell out of what did you say, 850 megawatts?
That's right. Yeah.
So what happens then? I mean, are you as challenged to get power to people as everybody else is? I mean, is there going to be a constraint there?
Well, yeah, we've been asked that. So we're already making plans right now to acquire additional megawatt assets. So I think you'll probably see us add to that 850 megawatts here over the coming year. And we have strong support for that activity through Fortress Investment Group. But yeah, it's a little easier for us to get either more used or new assets, because we already have strong relationships with all of the OEMs. It doesn't mean we're going to go straight to the front of the line, but because we're a power company and we have lots of experience installing this equipment, and we also own and maintain this equipment, it does give the OEMs that would do a deal with us comfort that, we know how to use this, we know how to deploy it, which takes a little bit of the risk out of their side of the equation when they're selling equipment. Because normally the way they do that is they'll have people come in and place an order. They'll put a down payment down, and then a lot of these folks, if they're not serious power operators, will end up not consummating or paying, the rest of it off, and then now all of a sudden it becomes free equipment. What's different in the edge data center side, though, as opposed to where it's hard to get new or even used generation assets, we are already in the front of the line for the edge data center manufacturing pipeline. So with our strategic partner Accutech, that Doug has brought to us, and they've been great partners. They have a tremendous ability to scale up the number of edge data centers that can be manufactured. And so we are not worried about getting more edge data centers to keep up with that demand. So that's a good note for us there on the edge data center side.
So the asset management agreement it's five now that portion of that for DUOS. What are the margins on that for you guys?
Yeah, so there's two components. One is the asset management agreement.
Right.
Basically, what that's doing is that's worth about $20 to $25 million a year for Duos in terms of revenue. And that revenue, is probably making a gross margin at about 50% gross margin. And it's netting down to about a 15 to 20% net margin. And you got to really kind of think of that as a services contract, and for a services contract, if you're netting, a 15 to 20% margin on that, that's good money for us.
Okay.
It's a good investment for Fortress because they literally had a management team in a box that they just opened up and literally started deploying the assets. Like I said, we've got 13 on contract now. I think we're about to go to about, another 6 or 10 are going out on contract. So it's been a very beneficial thing for everybody. Again, back to the equity. Again, it's a 5% equity stake in
Right.
in new APR Energy. When you look at our publicly available financials, it added around $7 to $8 million onto our balance sheet as an asset. Just that equity stake, and then there's some more backlog, of course, that's in there because the contract's a 2-year contract.
Okay. Okay. I mean, this sounds like a win-win-win all the way around. To me, right? I mean, I think you start to see. So as these locations, so you have, let's say Doug, you have one major tenant, right? Well, you can bring in as many as that unit can withstand, right?
That's right.
And as that goes on, that just becomes reoccurring revenue, right?
That's right. Absolutely.
Yeah, so the edge data centers, to be clear, that's also an own and operate asset, right? So we put those assets out, we own the assets, and then people pay, annual recurring revenue. And what we're seeing right now, those contracts are probably going at least 5 years, and they're often going to extend based on Doug's past experience with that type of business. And I think we're already seeing that demand for sure now, which is even higher than it was before.
So you're going after schools and hospitals, but essentially anybody in that area could link up, right?
Yeah, here's the great thing about it. Here's what's just awesome timing, and we're doing it at the right time. So our focus is education, right? Healthcare. So what we do is we go behind the region center in the school district. So we put the actual pod behind the school main campus, right? And then all the other schools feed back to that one. So it's a hub. But when we do that, what happens is now with the AI and all the eyeballs using so much data, it doesn't make sense to build a $40 million data center in Amarillo or Lubbock. It doesn't make sense to do it in a tier 3, tier 4 markets like that. So you drop one of these, now all of a sudden the local grocery store, the Walmart, anybody that's doing any kind of data capture, anything, farmers, even Taco Bell, right? 7-Elevens, all of them. They now have an opportunity to co-locate right down the street. So, and they're going to have to do that because who's going to put that and maintain that inside of a Taco Bell? They don't want to do that. They go to a third party, right? Or like a Walmart, like a Tata or whoever. And those are the folks, now that we're putting them on the ground, those are the folks that we're contacting directly now and saying, hey, look, we have facilities in these markets. Before, there wasn't an option. Now they're like, great, I can save money on my connectivity. I don't have to drive it 500 miles away. Latency isn't going to be an issue now. And I actually have a place where I can put it. I don't want to put it on my site. Just like, FedEx of the world and UPS, all those, they don't want to put this data inside their factory or in the warehouse. They don't have the room for it, and they don't have the cooling and the redundancy. So it makes sense to put these little hubs everywhere. And that's why I told Chuck, and you'll start to see it, mark my words, that these AI guys will start doing the same thing I'm doing, and they'll be the next one calling us because they want to go where the eyeballs are. And the eyeballs are where the phones are in the population. Well, there's 35,000 people sitting right there in Amarillo that have cell phones, up to 60,000. Lubbock, 200,000, right? So those spots are perfect, even for mobile operators to come back to. It makes complete sense. So you'll see in some of these markets, it's not going to be just one of our pods. Some of these markets can have 4 or 5.
So what is the I guess maybe you're probably not going to answer this question, but maximum revenue generation per pod?
That's a Chuck question. I don't know if I'm allowed. I don't know.
I
If we want, I don't know if we want to
I,
give the secret sauce away or
yeah,
not. So.
I know.
But
That's
it's
okay.
good. It's healthy. Put it that way. You get 20 of them out there, and you have a really nice business.
Yeah, what I can tell you, it's good annual recurring revenue. The payback period to produce a pod is it's around 2 years, and then you're using that pod for at least another 10 years. And the recurring revenue is really because it's recurring. It's about a 70% gross margin in that particular business, which is equivalent to similar run rates that you see with other data center operators.
Is it a 2-year payback, Chuck, just with the anchor tenants, or is it a 2-year payback maxed out?
No, it's a 2-year payback when you've got it probably utilized. Let's say about 5% utilization. So let's say you've got 15 cabinets, or you've got X amount of kilowatts inside there. If you're about 85% utilized, that payback over it's about 18 months to 24 months is pretty much spot on. Yeah.
Yeah. Okay. That's just an exciting. This is exciting, right? And you start dropping 15. The goal is 15 this year, right?
Yeah. Yes.
And then next year, who knows? And that's without any. You have the ability though, Doug, to build a full blown brick and mortar.
Absolutely. Yeah. Yeah. And I'll let Chuck address that one, but just to back up real quick, now that you have the pod, let's take Amarillo, for example. This is what's exciting about this. So we have the pod, we have the infrastructure there, right? So it's built. Now we can do things inside that pod in our own cabinet to double or triple our revenue as a whole. So we can start selling AI as a service. We can start selling bare metal. We can start selling other, a cabinet, say a cabinet produces $1,800. We have ways where that cabinet can produce $6,000 a month. So with our staff and our AI folks internally now that we're migrated together, we're starting to lean on those folks internally, like Jeff, right, the CTO, who is brilliant when it comes to AI and software. Oh, wow, look, we have this platform. Let's start selling services to that market. We have the main issue is you don't have the infrastructure. Well, we have the infrastructure there. Now we can, we have a blank canvas. So it's going to be pretty cool to see.
Oh, yeah. I mean, I didn't even think about that, but you're right. I mean,
See, I'm letting it out of the bag. I got to be careful. Chuck, if I was next to Chuck, he'd have kicked me 6 times by now.
I just look at, I'm looking at, Doug, you probably know, AI agents, right? I mean, that's kind of the hot thing right now. It's like you got an agent that is specific to a particular task, right? Maybe it's research but then now the agents are starting to work together, right? Which it's just like, holy shit, this is getting, it's scary, kind of a little bit, Terminator type stuff, but I figure we got to go for it.
And I see the telcos, I was telling Chuck this last week, I see the telcos becoming a partner of ours. Everybody's like, oh, telcos are going to go sideways. No, I see them becoming partners. They don't want the CapEx. They don't want to do these units, but you know what? They could white label it and sell to their existing customers. AT&T has, 10,000 over 10,000 customers there in Amarillo. Well, if they can sell colo to their customers now and white label our product. So there's a whole bunch of avenues to go. The key is getting it on the ground and getting an anchor tenant. And that's what we've got. And that's what we're doing. So it's going to be pretty cool to see. It's how many we can produce these things. Hopefully is when I wake up one day is my issue. We need more pods.
I gotta admit, I think this is the first time where I'm interviewing you and you're actually like in a facility, not in your vehicle or.
Yeah. I'm actually at the house. I'm getting ready to leave though in a couple of days, so I'm just trying to get everything squared away. But yeah, but that's a good thing. That's a good thing.
All right, Chuck.
And,
Any you guys feel as though I'm missing anything here?
No, I think, look, our story right now is really the future. Again, we're going to break even later this year. We have now successfully diversified the business into two areas that are super high growth. So, things are looking real good for us. We've got the right product, the right offerings right now. We've got the right team to execute on it. So, we're going to have a good year this year.
Do you feel as though you're okay for capital right now? Any need to raise capital? Everybody, is concerned about dilution, right? That's the big
So
issue.
we publicly talked about the fact that we'll probably raise about 10 to 15 million dollars this year. We talked about that publicly. And we will find other ways to fund the rest of the EDC growth, because again, anybody that looks at us close enough to be like, okay, these guys have a plan to put out 150 EDCs or more. I know that's going to be a lot of money. But Doug and I feel pretty confident that there's some other ways to do that without diluting. We did have an ATM, an at the market instrument open this last year. We used it very, very lightly. And we did it in such a way where it had a very minimal diluting effect on current shareholders.
How many shares do we have outstanding, fully diluted right now?
We're fully diluted right now. We're about 17 million now. And what Adrian, my CFO, would say for planning purposes, if you were consider invest, we'll probably take that to about 20 million outstanding shares. And then we'll probably try to hold it right there at that mark, which is still not a lot.
No, I think anything under 100 million,
yeah,
is nothing, right?
yeah. But we've talked about all that publicly. So again, what Doug and I are trying to do is make sure we can really get those 15 edge data centers out as soon as possible. That will further prove out the investment thesis, and that will then open the doors open for other forms of capital which are not dilutive.
Okay. This is, to me, is exciting stuff, man. I mean, if people don't understand the story here, they need to take a deeper, harder look, right? Because I think this is like the very beginning of this story, right? I mean, this could be a monster in my mind.
That's the idea. Okay, I owe Doug a private island, and he's working.
Doug is such a ball of energy, man. I mean, this guy is just pure energy. You're very, very refined and very calm, Chuck. Doug just looks like he's ready to explode.
Yeah, so it's so funny you say that, because me being the grunt Marine, and Chuck being the high level officer, been to how many tours. I had a picture. We had a picture taken at the open house in front of the pod, and I'm standing next to Chuck, and the news reporter calls me and says, "Why does he always look like he wants to kill somebody?" I said, he did. But he's a really nice guy once you get to know him. Just don't make him mad. You're good.
I love it. All right, guys. When do you think we should have you back for another follow-up?
Yeah, I think we've got our Q1 earnings call is in May sometime, May 15th.
Okay.
And so probably late May-ish. It's probably fine. Yeah.
All right. Anything either one of you can think of that you want to highlight?
No, now, right now, stay tuned. Everybody can see the earnings call transcript as well. And we do have some press releases coming up here pretty soon. And we'll stay tuned.
Okay, perfect. All right, guys, hold on one second. I'm going to turn this off. Thanks for doing this.
No, absolutely. It's always awesome. I love talking to you.
All right, hold on. Let me get this. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Chuck Ferry from DUOT Technologies, ticker symbol DUOT. I hope you enjoyed today's interview, and if you did, do us a favor, please give us a like. How about giving us a share? And while you're at it, why not smash that subscribe button? All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.